Welcome to Awesome Spreadsheets. In this demo, we're going to show you how to read your real estate development report. First thing you want to do is head down to your navigation button, select Financial Reports, and scroll down to the Real Estate Development section. This report is only available for the Pro version of Awesome Spreadsheets. Now, before we do any journal transactions or read the report, the first thing we must do is head over to our chart of accounts. And in the chart of accounts, scroll over to your real estate report section. And we have to make sure that we've identified all the different areas of the real estate report and we've matched it to the appropriate account. So the report is broken down into purchase price, closing costs for the purchase, the construction costs of the project, the carrying costs, such as utilities, insurance, taxes, borrowing costs, any cost for financing. We want to identify the revenue of the sale, selling costs associated with the sale of the property, and any realtor commissions. So as you can see here, I've already identified the land, building, and any depreciation underneath purchase price. For construction, in this example, we're just going to use framing and drywall as our construction items. If we scroll down, the sale of the property is set up here as a revenue. And then we have additional expenses. So we have our property insurance as a holding cost, our property tax, utilities are also holding costs. We have borrowing costs, any sort of interest that we pay on long-term debt, mortgages, short-term debt. And finally, we have our selling costs here. This would be professional fees on the sale, such as lawyer fees or accounting fees. And then we have commissions paid to the realtor when we sell the property. So you want to make sure that you go through your chart of accounts and you identify all the accounts that are going to be necessary to build this real estate report. Next, we want to head over to our financial statements and scroll down to the real estate development section. In this report, it's going to show us our purchase cost for the property, our project costs. It's going to give us our total cost before sale. So this is your running total. And then the sale of the property, the closing cost for the sale, and then our total profit. Now, how we build this report is through our journal entries. And I'll show you how to do that here. In our journal, I have all the different items or categories in the report identified in our journal. So first, in the month of January, we purchased the property. We purchased the property for $150,000 and we had a closing cost of $2,000. If we go over to our report, as you can see in the month of January, the only transactions we have in that month is the purchase and the closing costs, bringing us to $152,000. Next, we have in the month of February, most of our construction costs. So we have some drywall deposit, final payments, additional costs, some framing costs. If we head over to our report for our project costs for the month of February, we have $1,975 in construction costs. Back to our journal, in the month of March, we had utility payments of $2,000 and we had a mortgage payment of $2,500. But one thing to keep in mind with our mortgage payment, we had to split that payment. $1,000 is going to go towards our mortgage interest, and the balance, the $1,500, is going to pay down the mortgage loan. So if we go back to our financial statement for the month of March, you see that we have the $2,000 here and the $1,000 in interest payments for the mortgage. The rest is our utility costs. So back to our transactions. Finally, in the month of April, we sold the property for $200,000. We paid lawyer fees and closing costs of $2,000, and we paid a commission of 5%. On the sale of the property, this should be $10,000. So that's 5% of the 200,000. So if we head back to our financial statement, as you can see here, in the month of April, we sold the property for 200,000, and then we had $2,000 in selling costs and $10,000 in commission for a total of $12,000 in expenses. Now, if we look at the total breakdown for the year, we have a total purchase cost of 152. Our renovation costs was just under $5,000. Our total running costs is 156,975, and our sale is 200,000 less our selling costs. That leaves us with a total profit of $31,000. Hope you guys enjoyed this video, and we will see you on the next one.